Is America planning to wipe away its $37 trillion of debt using cryptocurrencies and gold? Please watch this video.
Right now, America is trying to change the rules in the gold and cryptocurrency markets. Remember how much debt they have.
So the economic advisor to the Russian President Putin suggested that the US might be looking to convert its debt into stable coins and gold, calling it basically a kind of a reset. So if this is true, what happens to your savings, the dollar in your pocket, and the price of Bitcoin and other cryptocurrencies? Will they shoot up? So let us simplify this to understand what exactly the Russians here are suggesting. See, you might know that the US government issues treasury bonds to raise debt to finance its overspending above the revenue that it generates from taxes every year. So imagine you bought US government bonds, treasury bonds worth $1,000. Then the US government will owe you $1,000 plus whatever the interest may be. Simple, right? But here comes the twist. Instead of paying you back in US dollars, the government suddenly says that they'll pay you back in stable coins and gold. And that is exactly what Russia is hinting at, a US reset of its debt using stable coins and gold. But is this really possible, or is this just a myth? Let's break it down then further. Let's see first what are stablecoins. So think of stablecoins as a digital version of your dollar. It's kind of a digital cash. So stablecoins are different from the normal cryptocurrencies because they are linked or pegged to fiat currencies like US dollar or the euro, or to commodity like gold. So by being linked or pegged means their values, I mean the value of those stable coins, is linked to the value of the fiat currencies like the dollar or the euro, or the commodity like gold. So now the question comes, who issues the stable coins? So basically there are companies like Tether and Circle which issues these stable coins on blockchain. We'll not get too much into the technicality of what blockchains are, but you should understand that this is a digital coin like cryptocurrencies which are issued by many companies, and Tether and Circle are most popular in the USA. Now the question comes that why people are even using the stable coins. So this is because they are digital, fast, borderless, and on top of that, they are safe also because they are pegged to fiat currencies like the dollar. I mean, you can use stable coins to transfer money internationally without the hefty fees which you need to pay when you are transferring money using dollars or the fiat money. Now, something interesting happened in July of 2025. So the US passed the Genius Act. Now, the Genius Act basically sets the regulations on stable coins issued in USA like the USDC or any stable coins that are traded in the USA.
On Friday, President Trump signed the Genius Act, the first ever major law regulating cryptocurrency.
This could be perhaps the greatest revolution in financial technology since the birth of the internet itself.
So it basically says that every stablecoin must be backed 1-to-1 with safe and liquid assets like the US dollar or funds held at insured banks, and also short-term US Treasury securities. So for those who do not know, basically the short-term US securities are the US bonds that mature in short term, like from 4 weeks to 52 weeks. So that means if a company like Tether issues $1 billion worth of stable coins like USDC, then it must hold an equivalent $1 billion worth of US dollars or short-term US Treasury securities. And they also need to publish regular audited reports to prove this. So this regulation, the Genius Act, made the stablecoins more safer because now they're backed with safe liquid assets, and hence their adoption saw a tremendous rise in the past few months. But apart from the increased adoption, there is another effect which you might not see immediately. So you buy stable coins and the company issuing it, like the Tether and the Circle, buys equivalent amount of US dollars or US Treasury. So in a way, indirectly, when you buy stable coins, you're buying US Treasury bills. Now, if people worldwide start buying stable coins in big numbers, that means billions of dollars flowing straight into the US Treasuries. So in other words, America just created another buyer for its debt. And that is what Russia is talking about. In fact, experts recently noted that the US Treasury bonds backing only Tether and Circle exceeded the total debt of Saudi Arabia, showing how massive this stablecoin treasury link already is. Tether itself reported holding $97.6 billion of US Treasury bonds. So with that kind of scale, the idea that buying a stablecoin indirectly buys you the US Treasury bonds becomes more than just an idea. It is already happening in practical. But hold on. Does that mean that America can use stable coins to wipe away its $37 trillion of debt? So at first glance, it looks like a yes, because every time somebody buys a stable coin, that puts money into the US Treasury bonds, right? But wait, is this always the case? Let's think about where the money is coming from for buying these stable coins. We can in fact think of three possible scenarios here. So scenario one is when the money was lying idle in cash. In this case, yes, it was fresh money that flew straight into the US Treasury bonds. So that really is an extra demand for the US Treasury bonds. Now think of a scenario 2 where people move their money from other assets like stocks and bitcoins and invest them into stable coins because they feel safer now, especially after the Genius Act and all the regulations that US has put on stable coins. So they feel safer now. So they put their money from other assets to stable coins. So again, this money is getting redirected from other assets into the US Treasury bonds. So hence this is again fresh and new extra buyers for the US Treasury bonds. Now there's a scenario 3 where people move their funds which were already sitting in safer places like bank deposits, money market funds or US short-term bonds. So in this case, the money was already helping to fund the US Treasuries. So moving into stable coins doesn't create any fresh demand or new demand for the US Treasury bonds because the money was already there. It is just reshuffling the money that was already there. So the reality is this, that only in scenario 1 and 2, when someone buys stable coin, then fresh money is directed into the US Treasury bonds. In scenario 3, there is no new benefit. So that's why the experts say that the stable coins help in funding the US Treasuries, but only to a little extent, because only the fraction of the stable coins bought actually brings in fresh money to the US Treasuries. So rather, the real question is how big is this pool of stable coins which actually brings in fresh money to the US Treasuries, and could it solve the America's debt problem? So let's look at the numbers. So right now there are about $280 billion worth of stable coins in circulation worldwide. So this is across Tether, Circle and every other US stable coin that is in circulation. We are talking about worldwide circulation. So the worldwide circulation of stable coins is $280 billion. So if at all this sounds big to you, then compare that with America's debt, which is of $37 trillion right now. And reiterating, we are talking about all the stable coins in play worldwide. The stable coins in US must be having a much little portion here. So even if you took every single stable coin in the world and forced it into the US Treasury bonds, then also it wouldn't even scratch the surface of the US debt. And even if the value or the number of stable coins doubled or tripled from here, it still is just a drop in the ocean of the US debt. But some might ask, why not to just mint stable coins even endlessly to close this gap? So here's the catch. Stable coins cannot be created out of thin air. By law, after the Genius Act, every stable coin now must be backed by a US dollar or a US Treasury bond, which means minting stable coins endlessly is the same as printing dollars endlessly. And if you try to print $37 trillion worth of dollars just to back the stable coins, that's just a one-way ticket to hyperinflation. So what happens? The supply of dollars explodes, but the amount of goods and services in the economy remains the same. So suddenly everyone has more dollars to buy the same packet of chips. And we have seen this before in Venezuela, in Zimbabwe, and in Germany a century ago. So when government printed money like crazy, people started or ended up carrying wheelbarrows of cash just to buy the bread. Hence, instead of solving the debt, this move of endlessly printing the dollar would actually worsen the debt scenario. Because if the value of the dollar becomes uncertain, strong one day and weak the next, the investors will panic. They'll demand higher interest rates to lend to America. In fact, most of them will stop buying US bonds at all. The same dead end appears when you look at gold. Gold reserves represent only 2% of the US government debt in 2025. So here's the conclusion: neither stablecoins nor gold can realistically erase the USA debt problem. The only other way this would work is if America is able to convince the world that these assets like the stablecoins and the gold is worth more, in fact far more than they really are, and which is highly unlikely. So after breaking this all down, here's the truth, that nothing close to a debt wipeout can really happen with stablecoins and gold. The math doesn't add up and the mechanics do not exist. So that means your savings are not in danger from some sudden crypto tricks unless the US itself abandons the basic economic principles. Yes, one thing these statements like the one from Russia could do is to promote speculative rally for the cryptocurrencies. And that's the bigger story. America's debt problem can only be solved by economic wisdom and good policies. It cannot be solved by stable coins and gold. I've already covered these deeper issues. Check my other videos if you want to understand why the US debt is going dangerous day by day. Thank you and have a good day. And if you like this video, if you learned from this video, please like and subscribe. Thank you.